Hello, everyone, and welcome again to the Smart Investor Podcast. And I hope you all are having a wonderful day. And the Smart Investor Podcast, where smart investors get their market information. Okay, this morning we're going to take a look at the Shanghai Stock Index. As you may have seen in the news recently, there has been a large decline in Chinese stocks, and we're going to take a look at what the charts are saying and where Chinese stocks may be heading from here. We'll also take a look at the S&P 500, the Dow Jones Industrial Average, another look at gold because gold has stabilized somewhat after the last major decline. But we're going to examine whether we are headed down from here or back up. We're also going to take a look at the US dollar. And yesterday we spoke about the Twitter versus Facebook, and we said how Twitter was underperforming Facebook, and it looks like everyone in the media and also I received a lot of emails about the Twitter versus Facebook, and the media covered Twitter versus Facebook. I don't know if it was spurred by this podcast, but there was some mention about Twitter versus Facebook in the media yesterday. So I don't know if those media elite folks are following the podcast and getting ideas, which wouldn't be bad. Okay, so let's get cracking. And as usual, if you'd like to take or look at the video market analysis, you can go to smartinvestorcentral.com/market updates, and you will see the video market analysis of what we are speaking about, because the video market analysis is also very instructive. Okay, the S&P 500 is still in a consolidation channel with boundaries at roughly 2044, and the high is at 2144. Actually, it's 2134, but let's just round up to 2140. So we have a 100 point barrier or channel in the S&P 500 that we're paying attention to. And the thing is, when it comes to chart analysis and reading price analysis, what you find is that the longer it stays in this channel consolidation is the more significant the channel is. And the more significant the channel is, if the market breaks out of this channel either to the downside or to the upside, you could see a pretty strong move in either direction in the market. So this channel consolidation is very important, and I'm definitely going to be keeping an eye out on it, because if you find that we close below 2040, especially on a weekly basis, and what does that means is that if we end the week below 2040, the market closes below the channel, we could see a large sell-off in the markets in the coming weeks after the close. If we see a close above 2140, you could see a pretty strong move easily up to the 2200 region in the S&P 500. So we're watching this channel. The market is up so far on the day, which is fairly positive for the bulls. And currently the market is trading at 2097.41, which is up some 3 points from the open as of this recording. Okay, taking a look at the Dow Jones Industrial Average, we see that the market is recovering also, taking its cue from the S&P 500. And the Dow doesn't really have a clearly defined channel per se. I would say the channel band is much larger, with 17,100 being the lower end and 18,400 being the upper end. If we see the market close below that box, we could see a larger pullback in the market. Taking a look at, so the Dow is taking its cue from the S&P 500, and it's recovering slightly. A close above 18,200 would challenge the 18,400 level, uh, and a close below 17,000, I believe, would lead to a larger sell-off. But when it comes to market direction, it's always better to look at S&P 500 because it's a much broader view of what's happening in the market. Okay, so taking a look at the Nasdaq, yesterday we did have some recovery and the market is up slightly on the day also, which is fairly positive for the Nasdaq. Resistance is at 4700 and support is down at 4350. Okay, so let's take a look at what is happening over in Europe. And we see that the DAX, after having some shaky sessions, we have a recovery today. And the market is recovering around the retracement level near this 11,000 region. If we see some stability in this region and we see the bulls come in, the next area of resistance in the DAX will be 11,800. And if we overcome that level, we could see a return to the all-time high of 12,390. So it just depends on what happens in the days to come. The FTSE, which has been definitely the ugliest chart when it comes to the major indices in Europe, we did have a recovery in the FTSE yesterday. But this downtrending channel is of concern to me, and until we close above 6,850, coming up to 6,900, I would say, to be safe, 6,900, until we close above that level, I would be cautious of the FTSE index. Okay, taking a look at what happened in China, and this is, we see that in 2014, the market, between 2012 and 2014, just to give you some history, the market was moving essentially sideways. Nothing much was happening in the market. So while the S&P 500 was moving up nicely, the market was moving sideways. Now in late 2014, in about November 2014, this market broke above its consolidation pattern, and we saw a huge increase from roughly 2,500 up to 5,500, and this happened between November 2014, roughly November 2014, and now in the high was 5,421, and that was made in June. So between November and June, we had a dramatic rise in Chinese stocks, and prices more than doubled in Chinese stocks in just about 7-8 months. And that's why it's always good to be looking at different market sectors. And one of my philosophies in investing, which you will learn if you continue to listen to this podcast, is invest in strength. Invest in markets that are actually performing, and circulate money out of markets that are not performing. And for more information on how to buy or sell a particular stock, you can go to smartinvestorcentral.com, and on the right hand side you will get a free course on when to buy and when to sell stocks, because that's the holy grail of what investors want to know. When exactly should I buy a stock, and when exactly should I sell the stock? When should I buy? When is the best time to enter, and when is the best time to exit at a profit? Okay, so taking a look at the Shanghai market, imagine that the market, for those of you who are listening, the market took off in November and was roughly at 2,500, and it climbed all the way up to 5,300 roughly. So we saw a dramatic rise in Chinese stocks, and if you are a part of this market, you would have done very well. But what happened in June, it was that the market stalled out and declined into late July. We had a recovery in mid-July, and we had another decline in late July again. But this decline so far has not gone below the initial bottom that happened on the exact date was on July 9th. The low that was made in July 9th was 3,535, and the market is well above that, 3,969. So this market has recovered somewhat. Now, a close below 3,500, for those of you who are still holding on to this, a close below 3,500 will prompt me to exit this market. But in truth and in fact, I would have exited this market before, because we should not allow a market to turn around almost 30% and still hold on to the position. The whole point of making money in the markets is get in. The market is moving up. Get in when the market is moving up. Ride the wave to the upside and take profits when the market is moving back down. That's how you consistently make money in these markets. Okay, so the critical area in the Shanghai Stock Index is 3,500. A close below that level would definitely prompt me to exit all positions in this index. Okay, and I know there are a lot of media stories about the decline in the Shanghai, but notice these media stories started to come on within the last week or so. This was well after the bulk of the decline, and that's why the media is always late to the party. And if by taking a look at the charts and seeing what the prices were actually doing, you would have exited this market long before the media got a hold of it. But if you are still involved in this, 3,500 would be my point that I would exit this market if I am still long this market. Okay, so moving on, let's take a look at the gold market, and we have some stability in gold. The market is meandering between the 1110 region and 1075, and I would say that, is this the bottom in gold? Probably not. I would be surprised if this is the actual bottom. I could see potential for this market to continue even lower. A close above 1120 would prompt me to believe that this market will pull back up to the 1160 level. And then at that level, we may see fresh sellers come into the gold market. And a close below 1080 or 1075 will issue in even more selling in the gold market. Okay, and just to summarize, gold is in a downtrend, and in a downtrend, I don't like to be long. In a downtrend, staying long in a downtrend is like swimming against the tide. It can be hazardous to your health, because swimming against the tide will allow you to tire easily if you are swimming. And this gold market is in a pretty strong downtrend, and I would be staying on the short side of this market. Or if you are not comfortable on the short side of the market, I would be avoiding this market like the plague right now. If the market does turn around and we see positive price action and evidence of higher highs and higher lows, then I will be looking to re-enter this market to the long side. But until that happens, it is the short side for gold. Dollar is up slightly on the morning. We see that the dollar is up, especially against the euro this morning, and up slightly against the Japanese yen. The Japanese yen, the strength in the Japanese yen is a response to the recovering Asian markets and the recovering Chinese market, because the Japanese yen tends to act as a crisis currency. So if you have a strong sell-off in global equities, what you may find is that the Japanese yen would increase dramatically. We saw it in 2008, and we see it every time the stock market declines uh, significantly. So just just bear in mind that the Japanese yen could be a area that you could be in if we get a huge sell-off in stocks. And the ETF, to take advantage of Japanese yen, you can go directly on the currency markets, or you can go to the ETF, the JPY ETF. Okay, so the Japanese yen is up slightly. The US dollar is up versus the Japanese yen this morning, and the US dollar is also up versus the euro. Now, the only market, the currency that is doing very well this morning against the dollar and against most of the major currency pairs is the British pound. We see that the pound is gathering steam and is currently at 156.83, and this pound is defying the general move in the dollar, and the pound is up against the dollar. It's also up against the euro, up strongly against the euro this morning, up strongly against the Australian dollar and the Japanese yen this morning. So the pound is doing fairly well this morning. Okay, so taking a look at commodities, and coffee continues to be in a pretty strong downtrend. We see that the market here is finding support at this 122.15 level, but the market is still in a downtrend. And for investors, the market that I get a lot of interest in is the oil market, and oil is still in a downtrend. We did have some recovery yesterday, but the market is in a downtrend, and I believe could challenge again the $40 level in crude oil. Okay, so that is a basic synopsis of what is happening in the markets. It's now Wednesday, and it looks like, just to summarize the action in S&P 500, it looks like the market has averted so far a sell-off. Remember, this sell-off and this recovery is very fickle. And as I said in the opening, in the analysis of the S&P 500, as long as the market remains in this channel consolidation pattern, the S&P 500 specifically, as long as it remains in this channel consolidation pattern, we can expect choppy price action. So you may see here the market is up one day, down one day, up one day, down one day. But if we break below these levels, then that could signal a larger sell-off. A word of note also is that we're approaching August, and oftentimes the month of August can be problematic. Remember, the 2008 sell-off started in August. So in August, we can have very choppy price action. And let me just see what transpired last August. Last August, I believe the market topped out in late August, and we had a decline from September to mid-October in last year. So last August was pretty good. Let me take a look at August 2013. We did have a slight decline in the market. The market moved from 1700 down to 1640. We had a slight pullback in last August. So August can be fairly choppy, and just keep an eye out on this channel consolidation. And if you don't know what I'm speaking about, go to smartinvestorcentral.com and watch the video update, because it will show you clearly the channel that I'm speaking about on the chart, and I'm outlining it now. Okay, so that's it for the market update for July 29, 2015. I hope you have a wonderful day, and as usual, be smart and pay attention to the price action and not the news. Thank you very much for listening.